This is Escape Velocity. I'm Crypto Pio. I'm here with JCoin, a collaborator and contributor to Escape Velocity. And today we're going to talk about Bitcoin. And I've
What
been
up?
waiting. I've been waiting for a chance to do this. All the videos I put out on the channel so far have been NFT focused. Me and JCoin thought it would be interesting to do a Bitcoin video and to start putting out Bitcoin content, considering how interesting this Bitcoin and crypto bull run has been. How the hell is it going, Jcoin?
My man, I'm good. It's a big buy the dip day. Bitcoin just in the middle of a big dip, and I couldn't be happier. As somebody who loves it, today is my happy day.
Today is a happy day for everybody that has high conviction in Bitcoin and understands that there are massive corrections along the way on these bull runs. When I open Twitter today, I see like a combination of, people expressing fear, uncertainty, doubt, FUD, but then the response from Bitcoiners is just so much data, so many charts that show all of the 38, 40% corrections, 25%, 30% corrections from the last bull run. And it just makes me feel so great. I wish I had more liquidity. I wish I hadn't just put all my money into Bitcoin already.
It's funny too because it comes at such an interesting time. So there's like a couple of things at play. I think this week was hilarious, but if you look at obviously, hopefully everybody here follows Max Kaiser. Actually, Cryptopia is the one who got me into Max Kaiser in the first place. It took me a while to get used to his style of talking. And what he said this morning was really interesting. He said, if you can't weather today, then you shouldn't be here. And I think it's just a fantastic way to think about Bitcoin. It's like you have to be ready to weather the storm to reap the benefits of everything that's coming. And this comes in during a week where Michael Saylor went up in probably the best debate I've ever seen. Highly recommend it. Bitcoin versus gold. And then later in the week, Biden comes out, I think this was yesterday, to talk about a capital gains tax hike, which I think is complete nonsense, and we can talk about that. That said, it's the first real thing we've heard or real effect we've heard from modern monetary theory, which everybody talks about as this like fantastic new modern thing, right? This is the reason that we print money. This is the reason printing money won't matter. And then we come out and say, oh, but actually we're going to tax you at over 50% to get some of that money back from the assets that all of you have. And it's really just this interesting thing, right? So you're seeing this evolution of the world that every Bitcoin maximalist has already said was going to happen. And now it's just playing out in real time. I feel like we're just living through a movie.
Yeah, that's very well said. I think that the Biden tax situation is interesting. A lot of people think that that's why the Bitcoin dip happened, but I'm not 100% sold. On that subject, real quick, just because it's top of mind for me, I listen to Chamath Palihapitiya a good amount, and he's talked about like a ton of times
Mm-hmm.
the idea of taxing high frequency traders, something like 0.01% on every trade. It's like 0.001% or something on every trade. It's a minimal tax. It really, I mean, they would complain about it, but in reality, it really wouldn't be a big issue for them. And if we did that, according to him, right, this isn't my math, but according to his math,
Mm-hmm.
we wouldn't have to have any capital gains tax for anybody. So I love how the government, before looking at like a complex solution like that requires some brain power, requires some smart people to really put their heads together, they're just like, yeah, we're gonna tax everybody for 40+% or the rich 40+%.
It's interesting, right? We every day I learn something that I didn't know the day before about the effects that come from printing trillions of dollars into the economy. And I think one of the really interesting things is that none of this is new. We've slapped interesting tags on it. Modern monetary theory, I think, is a really interesting one, but nothing about this is modern, right? The idea of pouring money into an economy is not by any means modern. In fact, we've been doing it for plenty of our own history. And then you start to realize like, well, what comes next? Like, how do you recoup the benefits of this? And then how does that affect Bitcoin? Right. And what Chamath, I think, is saying is like, there are other means to increase taxes in many ways without burdening individuals. Right. But the way that the government thinks is, well, we're going to put all this money out into society. That's going to inflate asset prices, Bitcoin included. And I think that's good for all of us. That said, then how do they take it back? Right? How do they get the money back to pay down the debt that they created? they have to take it from us. And this is where Michael Saylor always goes, right? Is like, well, you can't tax something that you can't see. You can't tax something that I don't ever sell. And so why would I exchange my Bitcoin? And this is something that you said to me many, many months ago. And honestly, I think I disagreed with you at the time. But you said to me, like, why would you ever sell your Bitcoin? I was like, well, how would I ever have any US dollars to do anything? And you were like, oh, you have a couple of more months of Bitcoin mental development before you truly understand that. And it was true. And now I sit here today and I kind of understand, like, why would I ever give this to anybody? Like, that would be a ridiculous, ridiculous decision to sell this and give it to anybody. So on a day like today, my first thought is I need to accumulate more. Like, I need to accumulate as much as I possibly can because I don't want anybody to take this away from me. In fact, I want to have as much of it as I can.
Yeah, and it's funny you say that because the whole "take this away from me" thing, Turkey's government or the founder of an exchange in Turkey ran off with everybody's Bitcoin. That's the "not your keys, not your coins, not your keys, not your cheese" theory that Bitcoiners have been pushing for quite a while and is absolutely accurate. I start to get anxiety because you can roast me as not a true Bitcoiner. I have a solid amount of Bitcoin in an interest bearing account. So I'm essentially staking that Bitcoin. And I've broken my own rules in the past like 3, 4, 5 weeks because I've been listening to, smart people that I trust, friends of mine that too, that have gotten into staking DeFi tokens. So altcoins, shit coins. Max
Mm-hmm.
Kaiser would crucify me if he knew who I was and he heard me
You
say
would.
this. Yeah, he would. And so I've started doing that. And the end game of me doing that is to end up with more Bitcoin, right? The idea is after you watch like this Dogecoin frenzy, people that aren't privy to the reality of Bitcoin, aren't knowledgeable when it comes to Bitcoin. They saw Doge at less than a 1 cent price tag. You saw a lot of, let's just call it what it is, not smart money pour into Doge. And then the whole end game with Doge, the savvy people are just looking to exit Doge, right? It's an exit plan. No one wants to hold Doge long term. They either want to buy Bitcoin or maybe they want to end up with fiat, right? And so seeing Doge go up however many X%, right? Perform better than Bitcoin over this short period of time, it has me thinking, well, what if I stake DeFi chain, for example, the only DeFi token that's built on Bitcoin, which is the one that I'm staking, and try to reap those benefits of it being brand new, me being early on it being a play by everyone that's in it to get more Bitcoin. So if that ends up going up by 10 to 15x, whereas Bitcoin only goes up by 4x, I can reap those benefits on the way up. The key is for me to exit, right? Because it's all about exiting before the rug gets pulled out and turn that DeFi chain into Bitcoin. And I wonder if I convert it one-to-one DeFi chain into Bitcoin, I actually don't know. This is something I'm not educated on. Is that a taxable event? I'm not sure. If it's not, that's amazing.
Interesting. Yeah, is the conversion from one to another. I guess really the question is, does it involve a sale of anything? And if it involves a sale, then probably. If it's conversion, maybe not. It's interesting. And what's funny is, I think it was earlier this week, Raul Paul, the founder of Real Vision, got roasted on Twitter by Bitcoin maximalists, which was surprising to see, at least for me. Like, I respect him very much, and I think he's a really smart person. But what he said was like, I am a macro investor seeking returns, massive returns. And actually, what he saw is that he thinks in a world over the short term, Ethereum and other coins might actually appreciate at a faster clip than Bitcoin, right? What was interesting that he said in that same sentence, though, was that by no means does that make him think that there is a reason that Bitcoin would not become the number one store of value. In fact, he still believes that 100%. But as he seeks out these returns, he starts to say, well, how can I accumulate more? And that's an interesting way to think. I think it's totally against the Max Kaisers of the world and the true maximalists to say, like, I would never get rid of my Bitcoin. I certainly wouldn't get rid of it for another coin that I know nothing about. I tend to be more in that camp still, where I'm trying to figure out, like, if I do buy into these other things, what am I buying into? And I start to think a lot about the mental energy that I expend trying to figure it out and research it. And that's where I get stuck. Like, do I truly have the mental energy to deeply research Bitcoin and understand the conviction that I have there? while also trying to deeply understand all of the other coins that are out in the market. And today I haven't found that balance. Like I still feel my mind and my conviction lies in only one place. Not to say I don't like to dabble in just like buying other random things, but I have no conviction whatsoever in Ethereum. I have no conviction in Mana. I have no conviction in Chainlink. And the reason is because I don't know anything about them. I own some, but I don't know anything about them. And so making speculative bets, like fine, but would I ever think of that as a true savings account? Absolutely not, at least today. And so that's where I'm starting to transition my mind away from investing and into a savings account. And I'm starting to just believe that Bitcoin is my savings account. That was a big shift for me, going from thinking Bitcoin was an investment to treating Bitcoin as my cash, as my money. That was big. It took me many months to get to a place where I feel comfortable saying that or doing that. But now today, like that's my savings account. I'm certainly not going to be keeping it in a fiat bank, earning 10 basis points per year of interest.
Yeah, I mean, Michael Saylor would call it your bank account in cyberspace. Interesting that you brought up Raoul Pal. Raoul Pal has been transparent the whole time that he is a trader first. He obviously is a Bitcoiner. Yep. He's not a Bitcoin maximalist. He, for a while, has been saying he's 80% Bitcoin, 20% Ethereum, and has said that he thinks Ethereum can be bigger than Bitcoin. What I would chalk it up as is I think that he understands Ethereum. I don't understand Ethereum. I have not poured hours and hours into Ethereum. I've poured hours and hours into Bitcoin, and thus I understand Bitcoin. My belief is that 99.999% of the world does not understand Bitcoin, and 99% of people that own Bitcoin do not understand Bitcoin. So I've put the work into being that 1% of Bitcoin owners that actually understands what I have. I don't sell my Bitcoin. I won't sell my Bitcoin. It's not going to happen. Now I'm starting to make those speculative bets on like DeFi chain and this other stuff. I bought a little Cardano. I know I'm going to get roasted for this, but the idea is to get more Bitcoin. The idea is to play this hype train and get more Bitcoin. Right. But yeah, Bitcoin maximalists, they kill Raoul Pal, and I get it, but Ethereum is a hard thing to understand. And I'm not saying that these altcoins aren't going to be good like investments, as in you're not going to get good return on them. Long term, like X number of years, they're not going to outperform Bitcoin because they're married to the performance of Bitcoin. And also they're just different things. So while Bitcoin is money, Ethereum, yep. I understand you can pay for things with it, and it's a token, but I compare it more to like if I go to an arcade and I convert fiat money into tokens to put into arcade games, that's money there, right? So anywhere that accepts Ethereum is money, right? But Bitcoin is like actually money. Bitcoin is the digital version of gold, which is the, human's longest standing type of money. So that's sort of the difference. And again, it's not that I think Ethereum is going to zero or I don't think Ethereum is going to appreciate well. It's just not the same thing. And I haven't put the work in to understand it. And there's no question it's way more speculative. It's way more centralized than Bitcoin.
Yeah, it's interesting you say that. In a lot of ways, I think about Bitcoin as value. I think of it as like the value holder, right? This like store of value. That said, and it's so fascinating to see, but I downloaded Strike by Jack Mallers, like built on the Lightning Network. I downloaded it on my phone. I was very curious to see like what's going on here. Like, what don't I understand about the ability to use Bitcoin as a payment method? And for everyone watching, Strike is essentially the means to send money amount around the world, utilizing the Bitcoin network to do so immediately and for free. And the way that Jack Mallers, the founder of it, describes it is essentially to say that you can deposit fiat into Strike. A bunch of Satoshis are essentially what you're depositing in. Those Satoshis are like little soldiers, and they travel across the world to wherever you need them to go. And they show up at someone's doorstep, and they immediately get converted into a localized currency immediately and for free. That's massive, right? I started to think the other day about how would I send money to somebody in Canada right now? How would I get money to somebody in Canada? Venmo is not there. Cash App is not there. How would I send them money? Would I send them in the mail? Like, would I send them a wire transfer? Chase Bank charges me $25 to send and receive a wire transfer. What if I needed to send them $15? Would I just lose an additional $25 on top of that? So these things started to stand out to me. And then I started to realize that we're not even close to the end of this thing. Not even close. Sapphire. Is Sapphire
No,
a
I'm listening.
Bitcoiner?
Sapphire's listening too. She's definitely a Bitcoiner, and everything that you just said is absolutely accurate. I think that people don't realize that even though there's here, there we go. Sorry about that dead air. So even though there's, you
Dog
know,
shout out. Dog shout out.
what's up,
Dog
Cuba?
shout out.
Even though there are these fintech companies like Square, for example, or like Wealthfront, where it's a really pretty user interface and it's much easier to use like as a mobile app, and it's like a much more positive experience, that's not the legacy financial world actually being disrupted. Blockchain, which is Bitcoin. Blockchain and Bitcoin are one. There's no blockchain, not
Yep.
Bitcoin. Bitcoin is the technology where blockchain was invented. It's the most powerful blockchain network on the planet. And thus, it's the most powerful technology network on the planet. Would you look at that?
Right.
99.999% of people, if I ask them what's a more powerful technology network, Google, or like Google's technology network or Bitcoin, they would say Google. It's Bitcoin, buddy. Sorry. And
Wrong.
so that's the
Wrong.
that's the true disruption, because while these fintech companies have that pretty, that pretty user interface, that pretty front, the back end is still exactly the same. It's been the same for so long. The banking industry is so resistant to technological change. They poo-poo it. They poo-poo technology change. It's like if you were driving a horse and buggy and the car came out and you're just poo-pooing the car. You're like, yeah, what am I going to do with that car, dude? I got the horse and buggy.
I got a horse and buggy. I got a horse and buggy. It's so funny you say that, and I'm glad you called out Wealthfront, because earlier this week I received an email, and I've had US dollars in Wealthfront for probably 2 years, a little over 2 years, as did my fiance. And I say did on purpose because earlier this week I received an email saying that our interest-bearing accounts, which were already an absolute joke, earning 35 basis points, so 0.35% interest per year, was reduced to 0.1% interest per year. And the reason for that was because they lost a favorable relationship with a bank that they had, which signals to me that they have no idea what's going on around them. And if they do, they've decided to write it off, because I immediately transferred 100% of my wealth out, took all of it out of Wealthfront immediately. I closed the accounts, and the first message I received was that it would take up to 11 days to receive my money from Wealthfront to Chase, and that their team might need to reach out to me for some additional. That money has been sitting there for 2 years. Do you think I'm laundering it around? Like, I certainly don't think so. So that's where I immediately get lost.
So I
I
lost the
lost your
camera
video.
here. I know. It's
We
I'm still
lost you.
figuring out. All right, here I'm back. I'm still figuring out how to
There
use
he
the
is.
DSLR camera. But yeah, I mean that like summary of what happened with Wealthfront is everything. That just sums it all up. They're living in the dark. And really, when Chamath and these other guys say like that the banks are so fucked, it's
They're
100%
fucked.
true.
They're fucked, man. Read Jamie Dimon's shareholder letter. He says it. He says fintech companies are eating our lunch. And he's right. And he's right. And he says that his bank should be scared about what's going on around him, because if they don't adapt quickly enough, they'll get left behind. And of course they will. Like, do they have many years of runway ahead of them because there is boomer money sitting in large private wealth accounts within JP Morgan? Of course. Do they have billions of dollars in US dollars on their balance sheet? Like, of course. Are they just going to go away? Like, no. But will consumers like us do anything with them? Will I do any business with Chase Bank in the future? Absolutely not. The only reason that I do business with Chase Bank today is because I cannot figure out how to get my money from the business where I work into an account that is not a Chase or a Bank of America or anything like that. I just cannot set it up to get the money to go anywhere else. So I need an intermediary solution to accept money before I can send it somewhere else, which is out of control, out of control. And so that's where it breaks down for me. It's like I'm left with an IOU from Chase Bank who is making a ton of money on my money and giving me actually negative returns back. Not only negative just because of inflation and interest, like all of that, they're actually charging me money to do business with them when I do quite literally no business other than put money in and out of their bank. So that to me like just completely breaks down the entire system. And I start to think like this can't go on forever, right? It can't. And it hasn't been here forever and hasn't been like this forever. So it's certainly not going to go on forever. So what's next? And I think what's next is, like you said, a bank in cyberspace where Jamie Dimon just doesn't exist.
Yeah, God forbid Jamie Dimon doesn't exist. Yeah, I mean, everything that you said is 100% true. I mean, when you sort of think about it, like even if you look at the testimonials by young people that are graduating college now, what Ivy Leaguers used to do is they used to go into investment banking. They used to work 100 hours a week. They'd make like, between 100 and 175 grand first year out of college. That was like a huge deal. Those numbers don't even like scratch the surface now, considering the money printing and inflation that's happened. And if you look at what people are saying about it now, they're saying that they don't enjoy working at these banks. They're not organized. It's not like a good sort of like learning experience anymore. And the worst part is that the money isn't what it used to be. And they're talking to their Ivy League friends that work as, guess what? Software engineers for the big tech companies, where Google gives you a $500,000 equity component on top of your $150,000 base salary plus bonus. You're 22 years old, by the
Mhm.
way, plus the best benefits out of any company in the United States. And that stock package is just going to go up, and it's, fully vested after 4 years. So they're 26 years old. They have what started as a 500,000 in Google stock. Now it's probably between 750,000 to maybe even 1 million, because they're printing all that money. So the stock benefits from the money printing. And I'm pretty sure that's
Mhm.
a lot better than working for Goldman Sachs. And guess what? Their work-life balance at Google is 1 million times better. It's literally not even close. They're allowed to work from their house in sweatpants with pink hair, and they're doing what they actually want to do.
Yep. Yep. And why would you go work at a bank? Why would you go work at a bank? Like it just doesn't make any sense to me, right? And then you start to think like, why would people do business with them? Why would you do business with Chase Bank? What are they offering to you? Have they offered you anything in return for your business? Have they given you anything? They certainly don't give you any interest. They charge you fees to do business with them. So what are they? They're a holder of your money so that they can make money on your money and you don't get to? What are they doing for you? Like, I don't get it, right? Like anybody else you do business with, they give you something in return, right? You go to the deli, you spend money, you get a sandwich in return, right? I go to Chase Bank, I give them all of my money and they charge me money to do that. I'm sorry, but that doesn't make any sense to me. And that's where it all breaks down. And now you start to think back to our parents' generation. What do your parents tell you to do? Save money, earn interest on your money, take that interest and become wealthy over time. Well, I'm sorry, parents, but there's no interest to be had because the banks keep that interest for themselves and they keep it amongst the wealthy elite. And so everybody else out there is putting thousands of dollars every week into their Chase Bank account are losing money every day. 2% per day you're losing. And that's just if you believe the inflation metrics. 2% of your money's gone every single day. Gone. See you.
And no one
Good luck to
believes
you.
those metrics. Yeah,
Of course you
good luck
don't
is
believe
right.
that. Like pick your favorite hobby and tell me the cost of that hobby last year and tell me the cost of that hobby this year. Mine is skiing. The cost of that hobby last year was $150 per day. The cost of that hobby this year, $180 per day. I'm sorry, but a $30 absolute increase in that price is not 2%. That doesn't make any sense to me, right? Like think about your own basket of goods. And if your own basket of goods appreciates 2% per year, please send me your basket of goods because I'd like to operate in your life.
I want that basket of goods. Yeah, I can't wait to just fully exit the banks. I mean, I basically have, because I've converted like all of my liquid money into
Me too.
Bitcoin. The only stock that I hold is Tesla stock, just because if I want to like sort of de-risk, so to speak. That's the only stock where like I don't have time to learn like what's hot in the manipulated stock market. Like
Nope.
I totally respect people that do that, that make trades to try to end up
It's
with
great.
more fiat money in the stock market. Like, hats off to you. do, but I'm good on like figuring that out. Tesla's sort of established itself to me as one that the big hedge funds, that like the Kathy Woods of the world, the big banks are game to buy. So like it's good in their book, and it's got a lot of upside, and I believe in the founder, and I believe in the mission. So it's kind of like the perfect storm of what I would buy for a stock. But other than that, I'm all decentralized assets, 90% Bitcoin. I just started with the staking stuff, and it's only an effort to make more Bitcoin. And once the BlockFi credit card comes out, it's a wrap. I'm not even going to be spending money with a centralized bank's credit card anymore. Like, bye-bye, JP Morgan,
See ya. I genuinely can't wait until I can get rid of my American Express card. That costs me $500 per year and pays me essentially nothing. Really, I can't wait. I can't wait. Like, goodbye, American Express. Goodbye, Chase Bank. Like, see you later. I don't need any of this. I really don't. Like, none of you are adding value to my life, so why am I giving you all of my money? And the problem is if you go outside, I live in New Jersey, if you walk outside and say, hey, like, where do you keep all of your money? 9.9 out of 10 people will tell you Chase Bank, Bank of America, right? Everybody here will tell you the exact same thing. And so that's why I know that I've made the right decision, because I don't want to make the decision that everybody else has already made. I want to make the decision that nobody understands yet. And that decision is to take your money out of Chase Bank and Wealthfront and everything in between. Marcus, Goldman Sachs gallivanting as a consumer bank. Like, give me a break. Give me a break. You think Marcus is designed for consumers? Give me a break. Marcus is designed for their investment bank to have more money to loan out. Like, give me a break. Get out of here. I'm over it.
Very well said. Well, yeah, man, I think we could go for another 2 hours, but that was like a solid start. To all of the Escape Velocity subscribers, all 77 of them so far, first of all, I appreciate
What
it.
up?
If you hated this Bitcoin content, definitely let me know and we won't do it again. But otherwise, I'm hoping to be putting out more Bitcoin content in addition to the usual NFT content. I'm Crypto Pio, sitting here with JCoin. Thanks a lot for watching. Catch you guys next time.